Jazz age living, old fashioned sipping. Pizzazz ain't missing, got the fat cats kissing. Let's bring the old age back. Awake up from his nap, we bring in the.
God, we're talking about no sports on this episode. That's okay.
It's getting personal.
Okay? But I did want to, speaking of AMC stock, I want to get your thoughts on this whole thing, dude. Robinhood, first of all, your name's Robin Hood. You should steal from the rich and give to the poor, okay?
Not the other way.
But, yeah, what are your thoughts on them stopping the free market, dude?
So,
even though it's a bullshit stop, we all know it's all just a meme, right? But if someone, I was telling her this last night. Well, Adam was. I was in the closet.
watching.
Dude, if you want to buy this wonderful GameStop remote control for Xbox, right, for $4 million, then that is what it is worth. It's not up to someone else to tell you, hey man, no, this is $59.99. No.
Yeah.
I want to pay $4 million for it.
Right.
What do you think art is?
Right.
You know what art is?
What someone's willing to pay for it.
Yeah, I'm gonna spray something on a canvas. I'm Jackson Pollock. That's 40. Dude, those have gone for $10 million. So now is someone supposed to bust through the gallery door and say, no, that's not $10 million. Paint is that, let me break it down for you. Paint is actually $3.50 per tube. He's used 10 tubes, so it's $35. That's what you pay for it, not $4 million. No, motherfucker. I pay what I want because I got $14 million from GameStop stock that I gotta spend.
So
Anyway, what are your thoughts?
Which part do you want me to comment on?
I want you to comment on these motherfuckers saying you can't buy anymore. It's a free market. What are your thoughts, dude?
Yeah, so there's a really great conversation about this on the. So if anybody wants to hear a really great conversation about this, that is orders of magnitude above my level of understanding, listen to the All In podcast and listen to Chamath Palihapitiya talk about this. But briefly,
whoa, dude, you just went on like a twista like freestyle. What's his name?
Chamath Palihapitiya.
Okay. Jojo, you got that?
So
no.
I'll do a quick circle back. So Chamath Palihapitiya is he's a CEO of
a fun name to say.
It's a great name. So he's from Sri Lanka, immigrated to Canada, came to the United States, and made about $1 billion as I'm going to misrepresent him here, but as an early individual in Facebook who basically designed their algorithms for like feeds and ads and that sort of thing. Left several years ago before kind of all this more crazy stuff came about, and now manages his own investment fund, Social Capital. So he has a great rant about this, but essentially the question comes down to, what did Robinhood know versus what did the people that give them lines of credit know? So why is Robinhood free? So Robinhood is free to you and I because they don't make money off of us. They make money through what is called payment for order flow. So they're not actually fulfilling your transactions. They're giving the information about your transactions to groups like Citadel Capital Management and other groups like that so they can execute your trades for you, and then they essentially buy the share moments before the user buys and then sells to you at a slight premium and makes money there. So there's arbitrage between you, Robinhood, and Citadel and whatever brokerage fund they're using. So what basically happened is there was a run on GameStop, as you know, GameStop, bro. But hold the line. And the question was, did Robinhood run out of liquidity? Were they unable to fulfill the money that they needed to execute the sales and trades and buys? Because at one point there were shorts greater than the value of GameStop. 120% of the value of the company were shorts. So they couldn't cover anything.
Yeah.
So they had to freeze the buys because a short squeeze was on. And if they didn't freeze...
Can you explain a short squeeze for people that don't know?
I'll do my best.
Jojo?
I'll do my best. So shorting a company is the opposite of buying a company.
Betting against it. Betting that it will lose.
Right. So I'm
You're watching the Tampa Bay
I'm a journeyman.
Chiefs game. You're betting against Tampa.
So I'm a journeyman in this field, but essentially, let's say I buy a share of GameStop at $100 because I think that there's going to be capital appreciation of the value of that company and therefore the share that I own.
Yeah.
However, if I am dead wrong, the amount that I lose is equal to the amount that I bought in for. So if I buy a share at $100 and this company goes bankrupt, I've lost $100. That's quantified.
Yeah.
When you short a stock, you buy shares at 100. Well, excuse me, you borrow shares. So I would borrow shares from GameStop Bro. I've paid GameStop Bro nothing. I sell them immediately, and I have cash. And all that I owe GameStop Bro are some number of shares that I bought from him in the future.
Yes.
My anticipation is that the share price will go down, let's say to $50. I will then buy those shares at $50, give GameStop Bro his money back, and then, oh my goodness, I've made the difference. Good for me. And I was right that the company went down.
Jojo,
However,
are you keeping up?
Kind of.
However, the problem with this idea is, unlike if I buy a share at $100 and the company goes bankrupt and I lose that money, that's quantified. If I'm shorting a stock and I borrow shares, but I know I owe those back at some point in the future, and I'm wrong, and the company does well, and the stock goes up, the amount that I can lose is infinite because the share price of a stock is infinite.
Yeah.
Wow.
So a short squeeze occurs when there's been some element of groups shorting a company, and then something goes wrong. And in this case, it was groups on Reddit led by a gentleman named, I believe it's Deep Fucking Value is his like profile name, who said, we're going to get together, we're going to screw these hedge funds who all they do is destroy capital. They're here to, be apex predators and like kill companies and stocks. And we're going to buy big on GameStop because we see how levered they are in the negative. And we're going to get back at Wall Street. It's like the new Occupy Wall Street. Yeah. So in so doing, these millions of people bought into GameStop, including GameStop Bro, and that share price appreciated greatly. So the individuals who were shorting the stock had to say, well, we owe these shares back at some point. And if we don't start buying them now, the price is going to go higher. And therefore, we're going to have to buy them back at a higher price later. And we're going to lose more money by waiting longer. But when you buy a stock, it looks like you want it. So then they start buying it. And what do we have now in the world today? We have all these algorithmic trading systems where if a share is appreciating rapidly, all these big brokerage houses will say, well, shoot, trigger a buy. It's going up. So that started bidding up the share price higher and higher. Then people who were shorting the stock even further had to start buying. And then it went up and up and up and up and up. So Robinhood got caught in the middle as kind of this broker between all these things and said, we can't cover this spread. Because we're basically fulfilling shares on margin that we don't actually own. We're just passing through because we get paid on forward flow to make money. So they froze it. And the problem was that the CEO of Robinhood went on TV and said there's not a liquidity problem. But he only allowed sell orders to keep coming through and not buy orders. And so the amount that was lost, because all you could do was a one-way move. You had to sell. So people were like, well, what does this mean? I'm going to sell. So tons of people could have gotten screwed and lost unquantifiable amounts of money. I think lawsuits are going to come. So a short squeeze is when the shorts are wrong, they've shorted, and then the people who have lengthened these shares say you need to put up more collateral because we see you're losing money. And so what do they start doing? They start selling Facebook. They start selling Tesla. They start selling companies with real value to put more money in their bank account to please their creditors and show that they have the active collateral. But it shoots the share price higher. They've lost their bet. But Litecoin Bro, now GameStop Bro, makes a ton of money. Yeah. So that's my very naive understanding. But it's a really fascinating phenomenon.
I thought it was very in-depth and not naive at all.
Yeah, no.
And Joe, break that down again.
Talk back. See one, do one, teach one.